Good afternoon. It is good to be back. And a big thanks to Josh and Greg for filling in on the presenting side of things and showing me how it's done. We're coming into the final days of summer, and hopefully everyone's taken enough vitamin D to last through autumn and winter. And despite being August, where markets are generally pretty quiet, there was no shortage of events in the crypto ecosystem, and I certainly enjoyed keeping up to speed with the best institutional podcast in crypto. Talking of seismic events, few are bigger than today's. We heard the ruling from the Grayscale case, which we've been talking about for many, many weeks now. As usual, we have got a great lineup that are going to run through all of that and provide you some insights into how you should be thinking about that. We also had Jackson Hole last week, so we're going to have Greg and David run through what that means for crypto markets. And Sid is going to provide an overview of base governments, its decentralization plans, and an update on the ever-popular friends.tech. Some quick housekeeping before we get into it. Please don't forget to like and subscribe on whatever platform you use to consume this content. That is how more people can hear about it and we can expand the reach of the podcast. If you're watching on YouTube, don't forget to scan the QR code to access all of David and the team's fantastic research. If you're listening on podcast, the link will be in the show notes. Without further ado, let's get this going. David, let's bring you in to start with. The Grayscale ruling came out today. Can you bring us up to speed with exactly what happened and what it means?
Yeah, thanks a lot, Ben, and welcome back. You came back at a pretty good time because this is a big moment for the industry. Just to explain to people what happened, short answer is Grayscale won its case before the DC Court of Appeals. But for anyone who hasn't been paying attention to this as closely as we have, effectively what happened was, a while back, Grayscale actually had its application to convert its GBTC trust into an ETP. And now today, the DC Court of Appeals actually ruled that the SEC acted in an arbitrary and capricious manner by denying Grayscale's application. And just to kind of, explain just a, nuance in the language, I think a lot of people use terms ETF and ETP kind of interchangeably. They really shouldn't, because under the 1933 Securities Exchange Act, issuers can actually list products which are comprised of commodities, for example, under ETPs, but ETFs are actually products that fall under the 1940 Act. So just, we will use the term ETP here. But effectively what happened in the case is that Grayscale challenged the SEC's ruling. They said that the SEC was being inconsistent and that, it effectively approved a futures Bitcoin ETP, but it was unwilling to approve their application for a spot Bitcoin ETP. So the great thing about this is the opinion itself was unanimous. We saw that, the courts are in fact, giving us a lot of the regulatory clarity that the SEC hasn't been able to give us so far. So I think that what we're getting right now is showing that, the SEC isn't actually holding up the common rules and standards that are necessary, and that we need to see another body kind of step in here.
So that is great to hear, and the markets certainly have liked that. Everything has moved up in tandem, and BTC kind of leading the pack. I guess it's probably good, like you said, to just remind some of the listeners just how big Grayscale is. So the trust is north of $16 billion. So in a space that's hovering around $1 trillion at the moment in market cap, that's a pretty sizable asset, and it does have an impact on how Bitcoin is traded. David, question for you around, I guess, what this means for the industry going forwards.
Yeah, it's really important to mention that the application here to convert the GBTC trust to an ETP, it now goes back to the SEC. So this doesn't automatically mean the SEC has to approve anything. They could actually still deny Grayscale, but they would need a new basis to do that, given the court found that SEC's original reasoning was effectively unlawful. So I think that a lot of the underlying themes in this case are, very similar to things that we've been seeing as far as what's been going on in the crypto space and the regulatory side. But I think that probably the best solution going forward is still, of course, comprehensive federal crypto legislation. But I think that this is just kind of a good indication that if it kind of falls on the courts to actually pass anything, at least we understand where the thinking is on the side.
Interesting. So it sounds like the SEC has got options if they wanted to try and escalate it to the Supreme Court, but the conclusion so far from the three judges is pretty clear. So potentially that's maybe a low probability scenario. Greg, would love to bring you in here, and we've spoken about this a lot with a various range of clients, and a lot of people will be involved with the GBTC product or trade for different reasons. Could you perhaps break it down for us? Like, how do different types of people think about trading GBTC?
Yeah, sure. So this is the day we've been waiting for weeks and months now. So very excited that it's upon us. Now we don't trade GBTC on our desk, obviously at Coinbase, but we do follow it closely. And generally, there's a number of different holders of the Grayscale Trust. You can split them first just into two buckets, which is institutional and retail. And then within the institutional bucket, a lot of the players that have been in it, at least since, say, mid-June, when we saw some of those ETF filings, have been event players. So folks that invest in a security based on their probability of some event happening. That event we got today. And what we saw was the discount went from about 26%, which is where it was for the past 4 to 5 weeks. Now it's at 18%. So a lot of those folks likely had this on hedged. So they were long the trust and short Bitcoin. They could have been short futures. They could have been short the futures ETF. But it's a play more on the actual discount and less on the price of Bitcoin.
Interesting. And Greg, just curious there. So the discount's gone from 26 to 18. It's obviously coming a lot this year. Like, why is that not trading at par or just down 5 or down 10? Like, why is there kind of 18% still in that, do you think?
Yeah, it's a good question. We wouldn't expect it to trade at NAV for really two main reasons. The one being, or the first, is that there's still risk in this, right? Like David said, the SEC can appeal. They could find some other reason not to let them convert to an ETF. So it's not a done deal. So that in itself is going to inject some sort of discount into it. And then even when they do say, or if they do say that, okay, you can convert to an ETF, that doesn't happen immediately. There's going to be that'll happen at some point in the future. So then there's just essentially a time value of money between, now and then, and a hedging cost. So, that's another part of the discount. So that's why, even though we got this news today, we still, don't expect the trust to trade at NAV, or it's not surprising that it isn't.
Interesting. And now we have got that news. Are there any new types of traders that will come in? So you kind of mentioned the event-driven guys who are playing it for the event. The event has now happened or passed. Presumably some of those guys are keep close on, but maybe some of them trade out of it. Who knows? But are there any other people that might come in and see this as a new opportunity from here onwards?
Yeah. So the risk profile of this transaction's obviously changed a lot. So there's probably a number of things going on. You've had folks that have been in this for a while, likely taking profits, selling their positions. And you have other folks that now see this as a de-risk transaction. They're making their estimates of, okay, will it, what's the probability they will be allowed to convert? And then what's that timeline look like? And then what's my cost of capital? Do I want to buy it here? So that's really what's going on the institutional side. And then the retail side, obviously everybody's different. But many, folks, retail folks, like many of my friends, they own it because they want exposure to Bitcoin. They may or may not know it even traded at a discount or even care because, again, they see this as a 5, 10, 15-year play. So, I wouldn't expect too much movement on the retail side. But again, we'll have to wait and see.
Excellent. And in terms of flows that are actually going to affect Bitcoin specifically, do we expect to see anything there? So either maybe buy pressure on the upside or sell pressure on the downside?
Yeah, it's a mix of flows. So once you can or if we get to the point where you can redeem, then that'll really marry the flows once again between GBTC and the Bitcoin market. Because what would happen is I would, if I was a retail participant or any stock market participant, I'd come in and I'd sell my Grayscale if it's an ETF. Once it's trading below NAV, the ETF market maker would buy my Grayscale, quickly redeem, and sell that Bitcoin into the spot market. So that doesn't happen yet, but that's the sort of flow of funds that would happen if they do get to convert to an ETF. And if we go back to that institutional ownership, it's kind of very important to try to understand how much of that you think is hedged. And nobody knows for sure because this isn't what we call a 13F security. So if you own it as an institution, you don't have to tell anybody that you own it. But there are estimates out there. And we think about, 80% of the institutional owned GBTC is hedged. So that should lower the amount of flows back into the spot Bitcoin market if there are redemptions later on in the future.
Fantastic. And maybe just to kind of round it out, can you provide a quick summary to listeners, like how you would buy a unit of GBTC? Like, what is the method, like through your broker, but like where is it listed? Like how does that currently work? And what is the connection to that single unit of BTC as well? So how is that acquired?
So yeah, right now GBTC doesn't trade on the New York Stock Exchange or the NASDAQ. It trades OTC. So if you're a retail trader at home and you want to go buy this, you likely can through your Fidelity or Schwab account, but you'll have to basically read this addendum and agree and say that I know I'm buying something that doesn't trade on a national exchange. And that's just important because that is one hurdle that is up right now that could stop some people from investing in the product the way it is today. But then once if you do click through that, you can buy it just like a stock. It sits in your brokerage account. You would own every one share of GBTC. You own 0.00090094 Bitcoin.
Perfect. That's very helpful. So by the sounds of it, like if there is a path, and David, we'd love to bring you in here, like, looking at other products historically, is there a path for this to move onto a national exchange? And if that was the case, what would we expect to see as a result of that?
I mean, hypothetically, if the structure of something like this could be changed so that instead of being traded OTC, it would trade on terms of a New York Stock Exchange, ARCA, for example. But there are no timelines on this. We don't know when the structural changes are going to take place. So as of yet, I think it's unclear. But certainly, we've seen that exchanges like that tend to bring in a lot more liquidity. And I think that could very well be the case for something like GBTC.
That makes a ton of sense. I feel like it's the case that so many people in crypto have talked through for a while now, is just making it more accessible. When you make it more accessible, it's easy for people to buy. Liquidity improves, spreads narrow, volatility typically decreases, and it just makes it a more kind of mature market in general. I guess staying on that thread, there's been a lot of talk of late around an Ethereum ETF, and we've had a few filings. What does that mean to that as a potential ETF in the future?
Yeah, we saw about a week and a half ago that, Bloomberg reported the news. I mean, there was no official information out from the SEC, but Bloomberg reported the news that an Ethereum futures ETF, or a series of them, could be approved by the SEC sometime in October. This would be not dissimilar to what was approved back in 2021, when ProShares first launched the BITO, like Bitcoin futures ETF in I believe, October of 2021, like that was meaningful because like right after that happened, there was something like $1.2 billion in the first week of that launching, like so of flows of new assets kind of being purchased. So, something like that, I think people are anticipating for ETH now. We have seen recently that for the CME, for example, where the US-based futures exchange, like actually had open interest increased by around 10 to 11% in the days immediately following that announcement, that news published by Bloomberg, compared to just 1 to 2% of futures kind of open interest increasing on offshore exchanges. So it is showing that people are positioning already for some developments on this side.
What I find interesting is just looking at some of the performance in the last 24 hours. You got Bitcoin up roughly 7%, ETH about 6%, and then you got Bitcoin Cash up almost 18%, which I'm trying to square that circle in my head, and I can't quite figure that out. I know Grayscale do have Bitcoin Cash trusts, but Ethereum is their second largest trust, and Ethereum is certainly the asset which has far more interest than Bitcoin Cash. So yeah, curious to see how that one evolves. Might just be in a liquid market potentially. Who knows? Fantastic. So David, Greg, is there anything else do you kind of want to add? Any other things that we should be looking out for? Timelines, dates, things like that we should be marking in our diary as a result of this news today? Well,
obviously, this is good news, but it's step one in sort of the ETF saga, if you will. I believe there's some deadlines at the end of this week where we'll hear the first decision on some of the very first ETF filings. And then from there on out, it's just, keeping a close eye on what's going on with those applications, because that will obviously affect, not only sentiment, but, flows in our market.
Yeah, I'd say that people are now going to have questions about what this means for the, Bitcoin spot ETF applications are out there. Certainly, people are going to be thinking about whether this has any implications for surveillance sharing agreements, for example. I think that's going to be a major topic to kind of zoom in on as we kind of get away from this news.
Thank you, David. Thank you, Greg. Appreciate your rundown there. Obviously, an incredible piece of news for the industry today. There will be more to come. We'll continue to keep you up to speed with it and keep an eye on it. But in general, a great first step forwards. In other news, we saw Hashdex become the first to offer BTC and ETH to retail traders in Hong Kong. We have spoken at length about the potential for crypto to be more readily available in Hong Kong as kind of a test bed for China. So that's very, very positive that's got through. We'll keep a very close eye on what that means in terms of volumes. We'll get our team in APAC to stay close to that one. And then lastly, Solana. Maple they had a product on Solana about 6 to 12 months ago, and they discontinued it. They've now removed another product back onto Solana, which I think is quite interesting given it isn't going away, and we're certainly getting a few more questions about it. Greg, would love to bring you in here. In terms of flows, like what are you seeing in flow in Solana of late? I know it was very, very quiet. Is that still the case?
Yeah, so Solana, it's back on the desk. It obviously, took quite a hit after the FTX situation last year. It was sort of left for dead, and then had this, huge resurgence in the beginning of the year. And then once again, we saw a lot of activity after the XRP, news. It then sold off, and last couple weeks we've actually seen buy interest again, and I think it's because of exactly what you're talking about. There's just the fundamentals are improving. There's more going on in that chain. People still see it as the number sort of 3 or at least the top 5 token, even though it may not be from a market cap standpoint anymore. So yeah, we're definitely seeing more and more interest in it.
Yeah, another one to watch. There's Breakpoint at the end of October, which is their kind of equivalent to the ETHCC or something like that. So it'll be interesting to see what is going on there with regards to projects building on it and things like that. Now, moving across to macro, David, we covered a ton with regards to Grayscale, which is obviously the big news this week. Last week was Jackson Hole, which was huge news for the macro community. Can you run us through kind of how you're thinking about markets now and what was said by Chairman Powell?
Yeah, absolutely, Ben. I thought that the Jackson Hole news itself would have a much bigger impact on performance into the week, but obviously I think it's been dominated by Grayscale, at least as far as crypto is concerned. So I will say that going into Jackson Hole, expectations were very high already that he was going to maintain a hawkish tone. So my view was that actually relative to that, he would probably sound a bit more dovish, and that wasn't the case. So I was wrong. I think that if anything, he maintained his concerns surrounding inflation. He did acknowledge that, conditions for loans, for example, have tightened. But for the most part, one thing that I think people got wrong was this idea of R-star, because there was a lot of speculation that he was going to say that R-star, which for anyone who doesn't know is the neutral rate. Basically, it's this imaginary concept where rates neither kind of push inflation higher or lower from the perfect, conditions of 2% or the Fed's target. I know that in the past he's expressed some skepticism that R-star is meaningful as far as informing the decisions for monetary policy in the short term. I don't think he really deviated from that very much. If anything, I think that it still remains this kind of nebulous concept that I don't think really is meaningful to changing people's kind of view. I think if anything, we still kind of believe that, the conditions are what matters. And in my view, I really don't see the Fed actually, moving from its into like rate cuts anytime soon. But equally, I don't see why they would need to hike rates in September.
So in relation to that, David, I guess what's your base case? Do you think the Fed is going to be able to land the plane safely, as they say, and it will be just right, or do you think it's going to be a slightly bumpier period ahead for us?
Short answer is I do think that a recession is still going to materialize at some point. But at some point is, of course, a very like in the history of humanity, what the evidence that we have in terms of what's happened in terms of the inversion and the yield curve, other things. I mean, it shows that these things can happen, but the timeline is often very highly variable. It can be anywhere from 40 days to 140 days, and so far, we're only about halfway through since the curve inversion actually happened. So we're still well within our rights that up until April of 2024, we're not quite out of that window yet in terms of recession happening. But the way the markets have interpreted this has been very much, again, going back to that Goldilocks scenario, this idea that a soft landing is quite plausible. I think that I'm more in the camp that a recession will materialize, but it won't necessarily be dramatically it won't take out wealth over and over again. It probably could be something like a mild recession. We have to kind of keep in mind that for many of the families that have been hit by this, it's not just any one factor that I think you can kind of point to. For example, a lot of people look at the labor market and they say, well, look at the numbers. The absolute numbers look great. And if you compare it to 2001, 2008, that's definitely true. The only issue is we've already seen the peak in terms of the labor data itself. The job openings have actually kind of reached that point and it's starting to come down. Also, if you look at the actual wage increase numbers, actually the forward-looking headlines kind of show that new entrants to the labor market are getting paid far less than they were even 6 months ago. So I think these are the indicators I will look at rather than the absolute numbers that, the Bureau of Labor Statistics is publishing.
Interesting. And do you think Powell is looking at the debt burden in the US and what potentially higher rates does to that? To what extent does that become a factor in his decision making, do you think?
Yeah, there was actually a really interesting paper that was produced during the Jackson Hole Summit. And I think it came from the IMF as well as Barry Eichengreen. And, if you look at that, it said that the idea of indebtedness is going to last a lot longer than what people were expecting. And, that's very true. Even today, if you look at what's going on in the U.S., there's a lot of debate within the Republican Party right now about the fiscal deficit, there's a contingent inside the Republican Party that feels that they got the bad end of the deal, and that they want to reopen this idea of the debt ceiling. And we're coming to the end of the fiscal year in October, for example, for the U.S. We thought that the debt ceiling debate was over and done with for the year. It might not be. They might reopen this by October, for example. So this is something we got to keep in mind, because as the U.S. becomes a lot more indebted, like already we see that for like this quarter, for example, the Treasury is actually issuing a lot more debt than we initially expected. The problem with this is that how do we afford this at 5% rates? Like if we roll over this debt at higher and higher rates, like we have to service that debt. And I think that ultimately the central banks, like globally, not just in the US, but like everywhere, are going to need to reckon with this idea that if rates get too high, like debt servicing costs are also going to be too expensive. And that isn't necessarily part of their mandate, but certainly that's part of the thinking. Like I think some of these like second order thoughts about how monetary policy affects fiscal policy is going to be part of the thinking. And that will ultimately lead us to a combination of expansionary monetary and an expansionary fiscal policy in the future.
And what does that do for digital assets? What are some of the paths that it could follow?
I think that in that kind of regime, we're going to see a really strong use case for Bitcoin, for example, in particular, as a financial diversification asset. Because I think we've kind of gone around in terms of the financial innovative aspects of Bitcoin, but we really don't. We really aren't like super clear about how the technological aspects of Bitcoin kind of differ from the financial aspects. And when I say technological aspects, it's the idea that Bitcoin itself provides certain benefits as far as how to cryptographically encrypt something effectively, and actually transact Bitcoin, transact anything really. It could be messages, it could be USDC, it could be stablecoins, but you're able to do it in a very unique way because of the proof of work concept that it kind of offers. Whereas what I mean by financial innovation is its ability to actually diversify a portfolio, particularly in light of some of the concerns that we have surrounding profligate fiscal spending or debasement of currencies for the US dollar, for example. So I think that in that world where you're seeing that the central bank has no other choice but to potentially embark on expansionary monetary policy, because we're also seeing that there's a lot of spending. Like if you look at just like the CHIPS Act and the Inflation Reduction Act of the last year or so, like that's going to lead to around $2.1 trillion in additional spending by the government over the next few years. So if that's going to be the case, I think that there's going to be a lot of people who are going to say, listen, if modern monetary theory is going to be a permanent part of our new world order, maybe I need to diversify a little bit into Bitcoin or into crypto assets. And I think that that's going to be the strengthening use case from a financial perspective for a lot of these assets.
So thanks for that, David. Would love to bring Greg in here. So Greg, you talk to traders day in, day out. Like how are they thinking about risk post Jackson Hole, and how are they positioning themselves?
Yeah, it's a good question. Post Jackson Hole, we're in a higher for longer environment. I think the surprise is equities have actually traded reasonably well after we got that message. But generally in the crypto environment, we're seeing low positioning. So we actually took a look at global perpetual future open interest, and across ETH and a number of the larger, more liquid altcoins, we're seeing positioning that's 1 to 1.5 standard deviations below its average. So I think people aren't taking a lot of risk right now, which makes sense. Now we did get some new news out this morning, which will likely change that, and we'll rerun that analysis later this afternoon and tomorrow. And I would expect to see a lot of length re-enter the market, throughout today and the rest of this week.
Perfect. Yeah, that makes a ton of sense. It's a bit of news we've been waiting for a long time, and you and others on the call have been pointing to it. So yeah, it's good to have it and good to kind of talk through it. So throughout this, the Fed have said they're going to be very data dependent. So I'm always wondering what is the data they're looking most closely at, David, and what are some of the things that we should be keeping an eye out for?
Yeah, obviously there's inflation, but there's a lot to say when you point to an indicator like inflation, right? Because typically the central bank, the Fed has normally focused on core PCE, but I think that a lot of people have kind of become skeptical about what the Fed is actually looking for because they've talked about core, super core. I mean, like, what is it really that they're kind of paying attention to? It seems that they're changing to kind of suit their interests rather than kind of having one certain like indicator that we can all kind of point to. It doesn't seem like it's headline inflation anymore, and that's fine. You know, I don't think that headline is the most important aspect of it, but certainly kind of breaking it down into what's going on with services inflation, what's going on with, you know, on the labor market. I think these things are important to kind of point out, but it does seem that they're very flexible, quote unquote, in terms of what they believe is important in any given moment. So for the time being, it seems like they're going to be looking at the labor data. Again, I think that's a lagging indicator. It's not a leading indicator right now. We're going to be looking at, as far as on the inflation side, what's going to be happening with services, what's going to be happening with housing. But my expectation is that we are going to get more disinflation into the year. In fact, I wouldn't be surprised if the numbers for August and September actually were a little bit lower than expected. And I think that would very much change their perspective. So I think that the possibility of rate cuts, probably not going to be in 2023. But if you tell me that it's going to be towards the end of first quarter 2024, I think that's a very strong possibility at this point.
Thank you very much, David. A ton of data points to keep an eye on there with regards to macro. Greg, moving across to you on the flow side of things. As mentioned, August is normally quiet, but I do know there's been a fair bit going on in the desk. So what have you been seeing and what have you been keeping an eye on?
Yeah, it has been an interesting August, and today makes it even more interesting. So flows up until this morning when we got the Grayscale news were, it was quiet as we often expect. The flush lower that we had almost 2 weeks ago really took positioning down to levels we hadn't seen in a while. For example, like open interest in ETH was 1.5 standard deviations below the average for the past year. A number of altcoins, really had similar positioning. Bitcoin, relatively neutral, and I think that made sense, given this news that was about to come out. Now, after the news, obviously things have picked up quite a bit. We're seeing a decent amount of buy interest in Bitcoin from really a range of accounts. It's not just your crypto natives that you might expect. So I think that's really encouraging. However, just looking at the screens here, we're just under 28,000. And I think part of the question today is why aren't we higher? And I don't know the answer to that. But I'll feel better about the market after we get up above the 100-day moving average, which is about 28,500. So, really happy with the price action so far, but I don't think it's the start of a new trend yet. We have a little bit more work to do.
Yeah, that makes a ton of sense. And in terms of positioning and in the vol markets, like what are you seeing there?
So yeah, like we said, before this positioning had been, just really low, especially in the alts, ETH included. The option markets really mirrored what we were seeing in the perp markets, in that people were positioned for prices to move lower in the alts, specifically ETH, and we saw that through skew. Traders were paying up for downside protection. Bitcoin was far more neutral. Folks weren't paying up for upside or downside in the option market. I haven't looked at it recently, but I would bet that changed this morning. I would expect the skew now to be positive in that people are paying for calls in Bitcoin.
And I know on previous calls you mentioned seasonals and August potentially not being a great month. How are we looking for this month, and what can we expect from September?
Unfortunately, September is often worse than August. It's Bitcoin, just looking at the chart, I've been down each of the last 5 Septembers. And that's generally because September can be a rough month for risk assets. The dollar generally does well in September. So there are fundamental reasons as to why we see this price action. Definitely a time of year you want to be cautious. However, what's the old adage? History rhymes, it doesn't repeat. This could be a very different September given the news we just got this morning.
Now, moving on to Sid. Big thank you, Sid, for keeping me up to speed with everything Friends.tech while I was off. So I guess firstly, we'd love a kind of a quick update on Friend.tech, like what's been going on in the last 7 days. Are we keeping up the momentum?
Yeah, definitely. So momentum has kind of slowed down a little bit from the heated frenzy of last week on Friends.tech. But what has been happening is twofold. One is there's been an audience outside of the traditional crypto audience that the app has seemed to attract. Traditional Web2 media influencers from YouTube and TikTok, and then other areas as well. New audience members that are not, kind of core to crypto Twitter have been among the trending accounts in terms of the most traded accounts on Friend.tech. And secondly, there's also been a proliferation of forks and clones of the app itself across the market, with several of them offering tokens as incentives for users to migrate over. And there was a bit of drama today with the Friend.tech ecosystem where the core account tweeted out that users who used competitive apps wouldn't get Friend.tech points on the app, and so there was a bit of contention as to how best to incentivize or disincentivize users and whether that's the right strategy. But that's the current status.
Well, so how would they do that? They would just like check a wallet, and essentially if a wallet has interacted with this other particular protocol, then they would just kind of map them out of any kind of potential points or even airdrops in the future.
Exactly. Try to check the wallet and then also the Twitter account that it's linked to have that social to wallet connection, and then kind of rule them out of future points on Friend.tech.
Interesting. And do they have the Web2 connectivity to actually see if they're connecting with a different protocol? Because I guess within Web3 they can just create a new address, and that's not necessarily going to be connected. But within Web2, that's connected to your Twitter profile. So do they have access to check there as well?
Yeah, so the way the Friend.tech app was designed was they basically have a public API that anyone can query that links the Twitter account to a Friend.tech generated address. So especially for direct copies of the app itself, that API is available. So they could just query those APIs all together and see which Twitter accounts have linked to clone Friend.tech app addresses and go from there.
Interesting. I mean, maybe I'm being cynical, but it feels like it doesn't feel that crypto to say you can't use another protocol. I feel like the whole point of this is that it's open and it's free, and you can choose based on the merits of a particular protocol. So I'm curious to see how the ecosystem takes that, and whether or not kind of people actually go against it, because it doesn't necessarily hold crypto's values in some ways.
Definitely. There's been a lot of pushback exactly with that point. And the team has deleted the tweet since, but a bit of drama on crypto Twitter regarding that.
Wow, awesome. I know you've been playing around with it. Like, how has it been? Like, what's the user experience like? Like, is it still kind of very much like testing in beta? Like, how does it feel when you use it?
Yeah, it still kind of is like testing in beta. The app itself, while the onboarding experience is pretty smooth to get it on the phone home screen, which is novel to most apps. You need a wallet, you need a web browser, etc. While using it, it still does suffer from some performance lags. I think they're just trying to work on the server infrastructure in the back end. They're continuing to ship new features. They've added pictures inside chat rooms of people holding an individual's shares or keys, that they now call it. So it's still kind of a work in progress, but it also because of the rise in popularity of the app, it drew attention to other decentralized social platforms, like namely Lens protocol and Farcaster as well. So Farcaster is something also newsworthy. It's a kind of decentralized social protocol where there's a core app called Warpcast, which is kind of like a Twitter clone, but on Web3 rails, and they're actually migrating to the AUP mainnet this coming week. So will be interesting to see. They've increased their daily active users quite a bit. All of these, Lens as well, have been increasing their user counts quite a bit ever since Friend.tech started generating attention.
Very cool, very cool. So, a fun fact: Dan Romero, one of the founders of Farcaster, was a very early Coinbase employee. So yeah, it's good to see that growing. So yeah, you mentioned Optimism. That's obviously the chain that those guys are choosing to build on. There was also some news this week about Optimism and Base and a governance agreement. Do you mind just kind of running us through that?
Yeah. So the goal of Base was to use the Optimism's op stack, which is basically a core set of tooling and code that allows new layer two networks to be built using the underlying mechanism that was built by the Optimism Foundation and team. And basically the goal, the vision encapsulated by both teams, by the Base team and by Optimism team, was to have a kind of what they call a super chain where multiple chains can build on this op stack, and each with their own user bases and potentially their own audiences. And the network itself and the code itself would be upgraded by what's known as this security council, which would consist of key members from each of these development teams. And so currently, basically, what was announced this week was the kind of announcement of a shared governance and revenue sharing agreement where, Base contracts, the contracts of the Base network can only be upgraded by a 2-of-2 multi-sig wallet, where one of the signers is Coinbase and one of the signers is Base, is Optimism. So I think, as more and more chains build on this op stack, I think we'll see the Security Council evolve a bit more and leading to progressively more decentralization with more parties chiming in.
Amazing. And on decentralization, we did actually, as we as in Coinbase, announced kind of the decentralization plans for Base as well. Like, what does that look like, and then how quick can we expect that?
Yeah, so I think one thing just for context to draw into account is like for listeners is how a layer 2 like Base actually works. So using the kind of op stack infrastructure, what Base essentially does is it optimistically confirms transactions and bundles them into batches, and then eventually settles them on the main Ethereum blockchain. And this is called an optimistic rollup currently. And this bundling of transactions is currently done by something known as a sequencer. And the vision always has been to progressively add more sequencers, so we have more decentralization. You can kind of think of a sequencer as the equivalent to a validator on Ethereum, but for L2s. And so that's kind of the vision with the kind of path to decentralization, where several teams are hopefully incentivized to kind of run these sequencers, and then basically there will also be several different clients that will run these sequencers, and with a kind of an upgraded software that can be used by any member of the superchain, which will include kind of fault proofs. So as these optimistic transactions are batched together, there'll be proofs within the transaction groups where you can kind of test whether something will actually settle or not. So it's kind of more of an innovation on the cryptography front, and using this kind of upgraded setup, the hope is more and more folks can run sequencers, and eventually the protocol becomes more decentralized.
Awesome. So there's a good path there, and a number of people can kind of run sequencers. Like, how are we doing? I guess we're coming to the end of on-chain summer, which has been absolutely incredible. Like, huge shout out to the team to put that together. Like, where are we now in terms of like number of transactions a day and like wallet addresses created relative to some of the other L2s out there?
Yeah, I mean, it's been pretty. It's been an amazing campaign so far. There's, in terms of like overall transaction counts, and numbers, they've kind of flattened out a little bit now. But overall, in terms of fees generated, there's been several million, $2.6 million of fees generated just through this campaign. And in terms of mints on-chain, like mints, there's been over 500K mints on-chain, with several key NFT projects having signature mints with Coca-Cola, Zora, Summer, Kevin, Parallel, the trading card game, which a lot of people are enjoying playing for hours on end now. So a lot of kind of unique apps that are kind of distinctive to the usual kind of DeFi staples of swapping and lending and the kind of stuff that we're used to with other new chains and layer twos. On-chain Summer has kind of ignited a different spark, a different energy. So hopefully that sustains even post this campaign. And we're kind of seeing that across the ecosystem as well. Obviously, the kind of transaction volume on Ethereum mainnet has quietened down a little bit over the past few weeks, but transaction volume on Base, on ZK Sync, and on Arbitrum has only been increasing over the past few weeks. The numbers off the top, Base has been running around 5 to 6 transactions per second, and ZK Sync is close to 10 right at the moment. So pretty high numbers.
Hey, Sid, what do you think is going to emerge as the winner or like a key sector for this? Like, any group of apps, do you think it's going to be gaming, for example, that's going to really start to dominate activity on Base?
I think there's these two kind of segments. One is building on top of the NFT side of on-chain Summer, more on the gaming side, more apps that involve NFTs natively. Parallel is a good example of this, where they offered their cards within the game to mint. There was a kind of a starter deck of cards, and players could use those cards in game. So if more and more folks and more games start developing using these NFTs as native assets within their games, huge potential for growth there. And then the other sector, I think, is this new wave of decentralized social. Forecaster on the Optimism mainnet, Friend.tech on Base. I think more and more of these dApps and experimentation starts to happen. It's kind of inspired quite a lot of curiosity, and there's been quite a lot of chatter in terms of ways that this kind of app design can be improved, whether similar elements of the stack can be used. So it sparked a new wave of creativity. Potentially, we see more apps integrating with each other and create more fun experiences for users.
Very cool. I'm curious, like, how are we looking in terms of like TVL for Uniswap? It was obviously great to see them all move across the Base pretty much on day one. Like, is the TVL growing? Are there incentives? Like, how should we think about that?
Yeah, so the TVL of Base overall is close to $200 million at the moment, and most of these DEXs, most of the big projects on Ethereum, Compound, Uniswap, etc., have migrated over and have an instance deployed on Base. But there's a pretty large, there was a pretty significant incumbent DEX that kind of launched first. It was called Base Swap, which retains quite a lot of the TVL, around $25 million of it. And the stalwarts Compound and Uniswap have been gaining quite a lot. Each of them have around $20 million each. But I think it's a bit more spread out amongst the ecosystem here. It's not quite concentrated in one party. That's what we've been seeing. It's across Base Swap, Compound, Uniswap, Friend.tech, other projects, Balancer, Moonwell, etc. So it's not quite a clear what's the clear winner or winning dApp quite yet in terms of TVL. So we'll see how that shakes up.
Interesting. So Base Swap, presumably, is a fork of Uniswap, and I guess the next step is an aggregator that someone is going to bring across from L1 to then execute efficiently across base swap and Uniswap.
Yep, exactly. And Balancer and any other DEX. There's plenty of other DEX clones out there. So, I think we see the similar stack ported over, but with the additions of potentially a new sector with decentralized social and NFT-based gaming, hopefully flourish on Base.
I was playing around with it most of the month and like mincing all of the NFTs and things like that. And it was like the usability, like the speed, the cost was like so much better. And it just kind of allowed me to envision what it looks like down the line and kind of executing on L2 versus L1.
And so do you have any insight into how the current TVL on Base kind of compares to, Arbitrum or Optimism or one of the other L2s kind of at inception? Because right now Arbitrum has around like 1.7 billion in TVL. Optimism has around 700 million. But like rolling the clock back, I mean, how does it compare given that we're not even through the first month of the Base's like total user launch?
Yeah, definitely. I mean, rolling the clock back, it's a pretty significant jump in TVL, especially in the current market climate as well. Arbitrum, if I remember correctly, I think it was floating around a few $100 million in TVL. They were doing months of their kind of campaigns for users to interact with the chain, and then once they launched a token was when it crossed $1 billion, and it kept rising after that to over $2 billion, and it's now close to $1.7 billion in TVL. So I think that was a big unlock for Arbitrum. But the other big thing, I mean, in terms of stickiness of TVL, as we've seen in these chains, has been stalwart dApps that kind of hold the chain down. So GMX is a good example on Arbitrum. And even on other chains, like on BSC, for example, there's Pancake Swap and some of their lending dApps that just kept offering quite a lot of incentives and a sticky user loop that just kept users around. So we'll see how that plays out on Base. Perhaps Friend.tech is it. Perhaps something else comes up that's sticky and more unique than that. But we'll see how that plays out.
Awesome. Thank you so much for that, Sid. Thank you, David. Thank you, Greg. That is a wrap this week. Obviously, a pretty momentous week of news, and happy to be able to cover this all for you today. We'll see you next week. And until then, happy trading.